Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel and zinc. LME 3-month nickel. 17 weeks ago, yes, 17 weeks ago, I said about this market, and I quote, "This leaves us with an interesting if complex situation. You see, one could look at the whole of the early November to date action as a possible complex head and shoulders top with a split head. It will all now depend on whether the market first makes a move down to the proposed neckline of the pattern, that's currently at 30,000 even, and highlighted in dark blue, and then what it does when it gets there." End of quote. That was fair enough. I'd seen a potential head and shoulders top, and I'd highlighted it all very, very sound analysis. And I expand on this further in my commentary in a short while. Then 16 weeks ago, I took a closer look at the action from November last year through to January this year, which revealed the following, and I quote, "There's also another, more acute head and shoulders pattern in there as well. I have highlighted the neckline of this one in purple to help aid viewing of it. It is more acute, and I consequently have doubts about it, but the significant feature is that the neckline has been broken on the downside. This makes for interesting viewing on what will happen. This does not take away anything from the larger, incomplete head and shoulders top pattern at this time. Thus, I'm minded to place some potential targets on the downside for this acute head and shoulders top. So a primary target X will be down in a 25,080 zone, and a harder to reach secondary target X1 will be down in the 21,390 zone." End of quote. Since then, the market has maintained bearish pressure and prices have dropped below the following: the August 2011 high at 25,195 and the long moving average currently at 24,805. Target X at 25,080 was easily reached in a non-aggressive but somewhat relentless move lower. However, upon approach to the February 2014 high at 22,155 and the associated congestion seen throughout the middle and latter part of 2022 at that and nearby levels, the market started to slow its decline and recover. Yet the recovery was limited in mid-April by, in part, the August 2011 high at 25,195, but also in part by the overhead and now declining medium moving average, currently 25,310. This set up the latest move low for a new bearish Andrews pitchfork pattern as well, which I will cover shortly. Now, going back to the head and shoulders top patterns, this second wave lower finally reached target X1 at 21,390 last week. Now, as I said earlier, I would expand on the further potentials below for the second less acute head and shoulders top formed since November last year. I said the following 5 weeks ago, and I quote, "We have had that confirmation of the move below the neckline. Thus, with the previous numbers in hand, we had a primary target for this less acute head and shoulders top in the 24,070 zone with a secondary hard to reach target X2 down in the 20,540 zone." End of quote. The primary target was reached 9 weeks ago, and target X2 at 20,540, well, that is still alive and also not that far away. This brings me to my final pattern, the earlier mentioned early February to mid-April bearish Andrews pitchfork. Should actually say bearish Schiff pitchfork. It's not an Andrews, it's Schiff, which I've highlighted in bright red on my daily chart. I had a small breach of the upper tine, and that's currently at 24,115, but this was quickly repaired, and the market is now congregating around the middle tine, currently at 21,485. This bearish Schiff pitchfork seems to be showing the current bearish angle of attack, so I would keep a close eye on the tines as they head lower. Upper, middle, and lower tine. That lower tine is currently at 18,850. The thing to watch out below is a little distance, and that is the congestion between 17,815 and 18,850, consisting of the August 2019 high at 18,850, the June 2021 high at 18,610, the important July 2022 low at 18,230, and the October 2019 high at 17,815. LME 3-month zinc. 12 weeks ago, I said there was a hell of a lot going on here with all the multicolored trend lines and patterns seen here. Since then, the picture has cleared up and we have established a more obvious trend. The key event was back in early April when prices which had earlier penetrated but not really broken down through the lower time, currently at 30.02, with the big old 2015 to 2020 bullish Andrews pitchfork, highlighted on my daily chart in bright red. Well, they finally pulled away lower. Primarily, I suspect, because the lower time was pulling higher, up and away from the middle time, currently 26.54, of the more recent late May to mid-August 2022 bearish shift pitchfork, which you can see highlighted in purple on my daily chart. Now, these two together had supported the market, but now that they were separating, well, their individual forces were and are less than the combined powers. We also at this time saw the establishment of the 2023 downtrend, currently at 26.30 and highlighted in dark blue on my daily chart. This is still valid, and it has also prompted me to draw a lower bear channel line for the action, currently at 22.84, which is also highlighted in dark blue on my daily chart. Thus, the picture is clearing up, with the market moving down with the dark blue April to date bear channel, which in turn is moving down within the purple May to August 2022 bearish shift pitchfork. To add to this, I've over many weeks spoken a lot about the March 2020 to June 2022 ascending expanding wedge pattern. Currently that's way up off the top of my daily chart. I've given in the past some outlandish potential targets for such a long dated and wide pattern. I previously suggested only looking at just the possible primary target X for such a pattern. That would be in the 25.45 zone below. This was originally one for the back of the diary and to be reviewed maybe once a year or so. However, last week the market reached target X, so I guess I will now have to look and see what a secondary and harder to reach target X1 would be. Well, I looked, and target X1 would be quite a way lower, down in the 13.45 zone. This is one definitely to put in the back of your diary and only look at occasionally. In the meantime, a more immediate support below is the October 2020 low at 22.82. The lower bear channel line actually incidentally crossing through this today.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.